Hi, welcome back to the show. And joining me tonight is my guest, Gord Henley from Henley Solutions. So now I guess we're going to talk about, I'm sure everyone has seen on TV the ads for the guaranteed issue, no medical insurance. You always see them during the day, offering insurance, no medical, pennies a day, etc. So I guess we're just going to kind of go over what exactly that is, because I get asked that a lot. What is that insurance that they're selling? So what is a guaranteed issue, no medical insurance? What can you tell us about that?
Guaranteed non-medical is something that is a relatively new product, and there are a lot of participants in it now.
Yeah.
And it is something that's being advertised very heavily. So I do get a lot of questions on it.
Yeah.
It's actually not the core focus of our business. We do the occasional guaranteed issue policy. I think you end up.
Yeah,
doing
I do quite a bit of the
this.
guaranteed issue, so that's why.
It is a good product. There is a need for it. It's for people who might not qualify for regular medically underwritten life insurance. It gives them an option to get coverage when they might normally be declined. They do pay for the privilege of not going through a medical, and it can be quite significant, that privilege, the cost of that privilege.
Yeah, that's exactly what I see is when I sell one of those policies. It's someone that has diabetes or someone that's over the age of 60, or people that just don't want to have a medical and deal with that kind of situation. So it's a simple way to get insured. Some of the drawbacks of it, though, is that it's costly because you're going through a non-medical route. They do limit the amount of coverage you can get, and also, another thing too is kind of misleading when they say no medical guaranteed issue. Some people assume that means that there's no medical questions, but there is a few qualifying questions, and it varies on the insurer.
Yep.
And the other thing too, the last thing I usually get asked is, can you just buy it over the phone or through the ads like you see on TV? Which you can't. You can get it through any licensed broker can offer those products. So the other thing, what else with that issue? The other thing too that's important to notice about that guaranteed issue, no medical, one thing to be careful about is what's called a deferred benefit. So when they show a premium, sometimes one premium will be lower than the other. The reason for the lower premium is because what they have called deferred benefit. And what that does is, what that means is that within the first 2 years, if you pass away, they won't pay the full amount that you're insured for. They only pay back whatever premiums you paid, plus usually a small interest rate, like 3 to 5%.
Yeah.
So it's kind of a question you have to ask: do I want the lower premium and risk not getting paid the full amount? And I've had two cases earlier this year, just after Christmas. One had deferred benefit; they passed away within the first 2 years, so all they got back was their premiums. And one that went the full amount from day one, and they got paid the full amount. So it's kind of a thing to be wary of too, and to make sure they understand too when they buy that policy. It's something that may not be explained if they buy it from someone over the phone, exactly what that deferred benefit is. So
no, and I think is a good point for you to bring up in the guaranteed issue is the deferred benefit, because as we've both seen, and as I think anyone watching at home is aware of, that people do tend to shop price first.
Yeah.
And yes, if you're simply calling around saying how much for this, how much for that, the person on the other end of the phone may not take the additional time to explain it as you just did, and someone will believe they are getting a deal, but they're really not if there is a claim shortly after purchase.
Yeah, exactly. A lot of people too assume because they have a poor medical history that they're not insurable, but this gives them an option to be insured, and it's not just for life insurance, but critical illness as well. They offer a guaranteed issue critical illness.
Yep, guaranteed issue or simplified issue is common. Often with the simplified issue critical illness, you'll see a reduction in the number of covered conditions.
Yeah.
So I mentioned in the earlier segment that the big four, the cancer, heart attack, stroke, and coronary artery bypass, they do make up the bulk of claims though. Yeah. So if someone is worried that they may be in failing health or in questionable health, and they're kind of coming into the critical illness discussion a little late, at least if they do qualify for a simple issued or a guaranteed issue policy, they're covered. They're going to be covered for those big four, which is their the likely cause of a payout anyway.
Exactly.
Yeah.
Yeah. So.
And I should mention on that note, even with the simplified issue with the critical illness, there are often options for that return of premium.
Okay.
So just because you are buying a different product or a different type of critical illness, often you still can find that rider that a lot of people want, the return of premium.
Right.
That if they go past the certain window, then they don't make a claim, then all of the premium spent
Come right back to them.
Yeah.
So it's not a complete loss. So
Yeah.
good. So let me just look here. So let's talk about what kind of life insurance concepts there are. I mean, it's not just to pay off funeral costs or debts, etc. There's other kind of options you can have insurance for. So let's talk about charitable donations. So if someone wants to make a large charitable donation with their life insurance, is that something they can do? Is that who they can name a beneficiary as a charity, or can they?
Absolutely. So with the charitable donations, a lot of people, rather than giving the money in small increments while they're living, they may choose to reallocate that into purchasing a significant policy for the benefit of a charity. And we do see life insurance used in that. That gets into the estate benefits of life insurance.
Yeah. So that can offset the final return, your charitable donation, any kind of estate issues. Okay.
Some other types, beyond just the debt, the mortgage, and the credit cards. We see it often used in business circumstances. So we do get into funding the buy-sell agreements, protecting a key man, or potential taxation issues linked to the growth of the business.
Okay. One thing I want to just mention too about charitable donation. It's not just the end benefit that you can donate. It can be the premium as well. You can assign that to the charity takes ownership of the policy. So instead of making that $20, $30 a month donation, you can turn that into an insurance policy so that at the end they get a bigger lump sum as well too. So it's something you can claim while you're still alive and still get that donation credit. So. It's not commonly known that. Usually people are surprised when I tell them that. So they usually just think at the end, the big whole lump sum, that's what gets donated, but you can assign your premium as well. So can you tell us a bit about what a buy-sell agreement is?
Buy-sell agreements. Often, we think about buy-sells being entered into in the early stages of the business, where for whatever reason, be it one person passes away, they may not necessarily make the other people involved in the business the beneficiary of their share of the business, and it becomes an issue of somebody who is a key person has passed away, and there needs to be an ownership shift. Life insurance is a very cost-effective way of providing that large lump sum early on in a business development for cash that might not be on hand to fund that type of activity.
Okay. You mentioned Keyman Insurance too. Is that similar to buy-sell, or?
Yeah, a little bit different than buy-sell. Where we would see Keyman coming into play more is you have an individual and the business might not be able to continue to operate in the same fashion in their absence. I recently took out a Keyman policy on an associate advisor who works for me, and the reality is, while I don't tell him on a day-to-day basis, he has become a rather important part of the operation. He does carry out a lot of tasks and is a benefit. And if he were to suddenly pass away on me, I'm faced with legal costs. I'm faced with accounting costs. And I'm also faced with the unpleasant task of quickly trying to replace someone who's built up a lot of proprietary knowledge. And that replacement doesn't come cheap. So by setting aside a relatively small premium on an annual basis, I'm able to ensure my interest that if he does pass away, I won't be significantly financially impacted. I'll be devastated. And and I'm not. We can talk about the emotional side of it, what it would mean, but the real reality is, it would be a financial loss.
Yeah.
And rather than take that risk, I've made a choice of protecting that risk with a Keyman policy.
Okay.
Yeah.
What else? You also talked about an estate bond. Can you tell us a bit about that at all?
Probably. How much time do we have left on this segment?
About 2 minutes.
About 2 minutes?
Yeah.
I don't know if we can cover a state bond in 2 minutes.
Give it your best shot. Give us point form.
I'm gonna sidetrack here.
Okay.
And talk about another concept that I do like that's a little quicker to run through, and it is back to my favorite, critical illness insurance.
Okay.
One of the more powerful tools that I see for business owners is using what's called a split dollar CI policy.
Okay.
With a split dollar CI policy, we've already established that I'm a very big fan of critical illness.
Actually, we're gonna have to go to break.
Yeah.
You're out. We'll talk about it later. All right, we're gonna go for a break, and Gord will finish up, and hopefully he'll be back in the studio when we come back. Thanks.